Hello, everyone, and welcome to our show today. I'm really glad everybody can join us. So today we're going to be talking about how to get cash credit cards for your business that are not linked to you personally, that have no personal guarantee, and most importantly, have no personal credit check. We're going to walk through the exact steps to be able to get this done. So for those that don't know me, my name is Ty Crandall, and I'm actually the CEO here at Credit Suite. At Credit Suite, this is what we do. We help businesses get capital, and we help you do it by improving your fundability to become more lendable, also by building your business credit that's linked to your EIN, not your social, and by accessing all financing, all loans and credit lines in one place. So if we can help you along the way, feel free to give us a ring, 877-600-2487 or info@creditsuite.com. So today, by the end of this, you're going to know exactly the steps to take to be able to get cash credit cards without a personal credit check. And I'm also going to show you how to do this without a personal guarantee. So first of all, let's start with the basic, right? Many entrepreneurs fail when it comes to actually getting money for their business. And that's because a lot of times what we find is that business owners are going to their bank. That's where they're typically starting because they're used to having those banking relationships. They just don't know that there are other options out there. They don't realize that they can build business credit. They don't realize they could do it without credit checks or guarantees or how to do it. And most don't even realize that you can get to a cash credit tier where you can get a Visa card or a MasterCard for your business without a personal guarantee and credit check. Now, let me clarify that. When I talk about cash credit, everybody's verbiage is a little bit different. When I talk about cash credit or the cash credit tier, I'm talking about a Visa card. I'm talking about a MasterCard, sometimes an American Express card, right? It just depends on who's offering that kind of credit at the time. I'm not necessarily talking about a credit line. A credit line from a bank is usually going to require more than just business credit to qualify. It's going to be looking at your financials and your credit and other factors. I'm talking about Visa cards, MasterCards that are primarily driven by your actual business credit quality, okay? Not these other factors that many other credit lines are actually required. So let's talk a little bit about what I'm referencing with business credit. Well, business credit is ultimately credit in a business's name. Okay, so this is when the business is building its own credit profile that's linked to the business's EIN, and it's based on the business's ability to pay the actual debt, not the actual business owner. So what happens is when a business builds its business credit, it can start qualifying for these high limit credit cards, including this cash credit that are Visa cards and MasterCards. Okay, so these are ones that you can use anywhere, not just store credit cards that you can only use in particular store. Since the business qualifies for the credit, there's rarely a personal credit check. As a matter of fact, if you do it right following the steps I'm going to show you, there's never a personal credit check, okay, unless you actually give permission for that to happen. So it's very important. When it comes to business credit building, you're the one that determines if there's a credit check or not. If you don't want to authorize a credit check, you don't authorize a credit check. And as you're going to learn as we go through this today, if you've built your business credit following the steps I'm going to teach you, then you're able to do that. And then the quality of the business credit determines the approval, not the actual quality of your personal credit. So there's a lot of reasons that business credit really matters. First of all, is it has no effect on your personal credit. One of the biggest mistakes I see business owners make is they start a business and they realize they think they need a certain amount of money to get it off the ground. Let's say it's $10,000. And then they think, well, I have a personal credit card with that limit, so I'll use the personal credit card to fund the business. The problem with that is that personal credit cards reporting on the personal credit reports, and of the personal FICO score, 30% of that score is based on utilization. So nearly a third of all of the FICO score is made up of what percentage of these high credit limits you're using. So if you're using a personal credit card to fund a business, rule number one of a business is everything costs typically double what you expect it to cost and takes twice as long to implement. So when you're starting a business, it usually is going to cost you twice the money that you think it originally will and take you twice as long to start generating the revenues and profits that you're planning on generating. So the problem is when you're using personal credit to fund the business, you're really damaging your personal credit scores, and that ruins your ability to use that personal credit for other kind of financing you could have easily gotten if you wouldn't have used personal credit cards to fund the business. So it's so important that we get you business credit cards that don't report to the consumer reporting agencies. We get you business credit cards that report to the business reporting agencies. Because with the business credit reporting agencies, they're not going to really hold it against you that these credit cards have high balances. As a matter of fact, sometimes it helps when you're putting a lot of money on these credit cards. It helps you get even future higher limits. So not having an effect on personal credit is a really big deal. Okay, it's also not based on consumer credit quality. So that's what we're talking about today. You don't have to have a credit check, which means no matter how good or bad your personal credit is, it's not going to matter to get the kind of credit we're talking about today. today. You can also get this approval with even bad credit, or no credit established for that matter. There's no personal guarantee. There's no personal credit check, as I mentioned. So with guarantee, there's no liability. You're not personally liable for these business debts because they're in the business name. And that means that you, if anything defaults or you default on that debt, then the business is liable. The business can be sued, but you can't as an individual if you are with an entity like a corporation or LLC where you're separate from the business, and if you're not signing as a personal guarantor for the debt. Another cool thing about why this matters is that this is very fast to be able to build. Look, if you're looking to start a business or looking to get money quickly for your business and you don't have the cash flow and you don't have the great personal credit, you don't have the collateral that's needed to get almost every other kind of financing, well, you could still build business credit and in months get to this cash credit tier. As you'll learn here, you can start getting credit immediately during this webinar from the system I'm going to show you, but then you've got to move through these steps to get to the cash credit tier, which could take you 6 months, might take you 9 months or 4 months, depending on many different variables. But again, about 6 months, you're able to get to this cash credit tier all the way through the business credit building process. And that becomes important that you do this because anybody can see these business credit reports. Lenders, credit issuers, suppliers, your prospects, your clients, your competitors, your business credit reports are public information. So not only is it important to build business credit just to get a Visa card or a MasterCard or to get a Lowe's credit card or a Sam's Club or a Costco or a Best Buy, but it's also important because this is your reputation. This is what others see to judge your business and the financial health of your business. And since this is public facing, you really want to take ownership of it and make sure that your business credit quality is as good as you could possibly get it to be. Now, when you have business credit, it gives you greater borrowing ability because you can obtain consumer credit cards at most retailers, and you can also obtain commercial credit as well. Okay, plus the limits are much higher. So business credit accounts, it's very common to see $20,000 to $40,000 individual limits on credit cards in 4, 5, 6 months into the process. If you think about that, you probably can't even get to a $5,000 or $10,000 consumer credit card limit in 6 months, but you could get to $40,000 in the business world. And the reason for that is businesses just use more money. They need more access to capital than you're going to find consumers have. You can also get approved for these when you can't get other kind of financing. Again, I often teach this 3 C's formula to being able to get financing, and it kind of works like this. In order to get almost every kind of loan or credit line that exists, you need one of 3 things. You need really good personal credit or consistent cash flow or some kind of collateral. If you don't have one of those 3, then 99% of all business financing out there is excluded. You can't get it, but you can still get business credit. So you can get this as a startup. You can get this if you don't have collateral. You can get it if you have bad personal credit. You can get it with no revenue or no verifiable revenue. So it's a catch-all solution. Anybody can get what I'm going to teach you today. You also it makes it easier to get loans and credit lines to grow your business. Now, this is where sometimes people get the messaging confused, and I want to be clear here. When you build business credit, you can get very high limit credit cards, primarily almost all driven by your business credit quality. But if you want to get loans, if you want to get credit lines, business credit quality is a factor in that, but not the only factor. Meaning that even if you build your business credit, it's great. You have 10, 14, 15 trade lines. Your credit scores are good. You pay your bills as agreed. If you go to get a credit line or a loan from your bank, they're still going to want to see verifiable income. They're still going to look at your personal credit. It's going to take a long time to get away from that. And even the big companies are the same way. When big, even publicly or privately owned companies go in and look for money, they can't just use their established business credit to qualify. The lenders are going to want to see verifiable income. They're going to want to see tax returns. They're going to want to see these other things. So what I'm going to teach you today is going to make you more lendable. It's going to help you get more access to credit or to get the loans and credit lines you want to get, but it's not the only factor that will come into play. But when it comes to business credit cards, it pretty much is the main factor, if not the only factor that's really driving the decision, as we'll talk about today. Okay, and of course it gives you a huge competitive advantage when you have access to capital and you don't, or versus if you don't. So business credit quality determines if you're able to get loans, how much you'll get approved for, and the terms you're going to pay. Look, your business credit reports even have a section at the very top called the recommended amount of credit you're supposed to get. And so what happens is in that recommendation of credit, the reporting agencies are telling the credit issuers how much money you should be given. Okay, your credit scores and how you pay your bills determine the rates and terms that you're going to pay. Okay, and if you don't have business credit established, then that is going to be very, very, very big deal, okay? So again, what it really comes down to is it comes down to the fact that business credit quality is going to determine if you're able to get loans, if you're able to get credit, if you're able to get financing in the terms that you're going to pay. Okay, you can be denied financing based on business credit quality even if you don't have any. So this is one of the biggest problems in the commercial credit world, is that you can be given and will be given a failing business credit scores if the reporting agencies know you exist and if you have no credit. So you really got to go through these steps to be able to get yourself set up to have the best chance of getting money. I deal with this all the time. $5 million, $10 million businesses come to us freaking out because they're trying to get loans and credit lines and get denied because of bad business credit. And they come in and go, I pay all my bills. I don't know how I have bad business credit. And then we discover that they don't have any credit established, and because of that, they're issued a failing score. So you can imagine what that's like to build a $5 million business and then not be able to get the money you need because you didn't build business credit. Okay, so this is one of the reasons that building business credit becomes so important to access the capital that you actually need to get. Okay, so let's talk a little bit about what you need to know when it comes to credit limits and business funding. So business credit limits are, well, a lot higher than what you're going to find with consumer credit cards, as we talked about. Okay, and that's because they know these cards are going to be used more often and they know businesses spend more money. So per the National Small Business Association, half of all business owners carry some sort of balance from month to month, with 9% carrying a balance of over $25,000. Think about that. That's way different than what we see in the consumer world. This is why limits are so much higher on business credit cards. Creditcards.com says businesses use their credit cards an average of 20 times per month. Again, significantly higher than what you find when the average when it comes to actual consumer credit card usage. Okay, this is why credit issuers love businesses, because businesses spend more money and they can charge more interest as a result of that. So that's why this system exists for you to be able to get these kind of business credit cards. They cater to businesses. But what I'm going to teach you today is not really publicly known and really promoted by credit issuers, because they're hoping that only bigger businesses gain this knowledge, and they really only have to worry about bigger established businesses getting these high limit cards without this liability. That's why this information really isn't publicly facing on how to obtain it, even though they want to issue these kind of credit cards because they want to see that you're actually out there and you're actually spending money. Okay, so business credit. It's not automatic. Okay, you have to actively work to build your business credit. Okay, it becomes very, very, very important to do so. And this is because most credit, over 97% of credit you're going to get that I'm going to teach you today, it doesn't report to the credit reporting agencies. Most of it doesn't. So you've got to get credit intentionally that does report, or you're not going to establish business credit. And again, when I talk about $5-10 million companies that don't have business credit bill, they say the same thing. I spend all kinds of money with all different kind of places. But the problem is that credit you're getting and using isn't reporting. So we've got to get credit that reports to the business credit reporting agencies, and that's exactly what we're going to dive into, and that's exactly what we're going to do. Okay, it can be done easily and quickly if you know the system, and that's what we're going to be talking about. So doing these steps I'm going to teach you out of order is going to get you turned down. It's absolutely going to happen. I can't tell you how many people will go through a training like this and get to the final step where I said, here's how you get a Visa card. Then they'll go into their bank and try to get the Visa card, and they'll come and say, well, it didn't work, and ignore all the other steps. It doesn't work that way. There is a secret formula that's got to be followed step by step that every large company follows to establish business credit. You can follow it too. But if you skip steps out of order, well, I'll give you an example. It's like trying to go get a home mortgage as the very first thing on your consumer credit report. It can't happen. It's not going to happen. You're not going to go get a mortgage and qualify when you've never shown a payment history with anything else, right? You come in and get small credit cards. Then the limits get bigger and you get more credit cards. And then you get a car loan. Then you get a mortgage. If you skip those normal steps and you just try to go get a mortgage, you're going to fail every single time, no matter how many loan brokers you go to get it. It's the same way in the business credit world. You can't just skip to the Visa card, the same as you can't skip to a mortgage with consumer credit. You have to follow steps and establish the credit profile that's needed and wanted to be able to qualify for that higher line credit. However, we know the steps, and this is exactly what we're going to be talking about today, is the exact order to take. So what do you do? Well, the very first thing you've got to do is you've got to build your business fundability, okay? What this means is it means you've got to do the things that are necessary that credit issuers are really looking for. So think of it like this. You've applied for credit cards before, one of two things happens. You either get denied or you get approved, right? But if you get denied, you typically don't get a denial right away. They say that they're going to notify you by mail in 7 to 10 days. What's happening there is these computers are putting you in two buckets: immediate approval or manual review. Manual review goes to a manual underwriter. The manual underwriter looks at it. As you and I both know, 9.9 out of 10 times that manual review results in a decline, right? We get that message by mail that says that they denied us, and it gives us the reasons of the credit bureau they pulled, blah, blah, blah. So you know computers are making the decisions here. The question is what are these computers looking for? That's fundability. Fundability is your ability to get the credit and financing you're really looking for. Fundability is this formula that lenders and credit issuers use to determine if you're worthy of being given money or not worthy of being given money. So you got to choose a business entity under the IRS's rules. So you really want to choose a corporation. You want to choose an LLC. Try to stay away from sole proprietorships. Try to stay away from partnerships. And the main reason you want to stay away from sole proprietorships is because you're personally liable. You are the business, so you're always going to be liable there. So if you want to avoid that liability, then you've really got to make sure that you come in and you actually come in and build the actual entity that's going to give you the best chance of separating that liability, which is a corporation or LLC. You've got to get an EIN from the IRS, irs.gov. It's free to get. Your business credit's built linked to that EIN number. You got to get a toll-free number for your business. You need to get a fax number. You need to list the phone number with 411. Okay, our clients, this is so important that we do this for our clients. We pay the bill for our clients to get this done. But if you're going to do this on your own, you want to go to listyourself.com or net. I think listyourself.net. They can help you. It's typically to do the same service that we do for our clients is $30 a month ongoing. But you need to get that phone number listed with 411. It becomes very important. Have a professional-looking website and email address that goes with that website domain. Have a real physical business address or get a virtual address. You can go to creditsuite.com/virtual to get the actual virtual address, okay? And that's going to help you there. But you need to make sure that you stay away from P.O. boxes and UPS addresses. That'll get you denied with many different kind of sources. Okay, you also need to kick off the credit reporting for your business. You need to do some things to make sure you have business credits, the ability to establish business credit reports. One of that is to get your free DUNS number with Dun & Bradstreet. You can go to creditsuite.com/DUNS, D-U-N-S. You don't even need to put these dashes in there. And that'll give you a quick link to the page that you need to go to with Dun & Bradstreet to be able to set up that DUNS number. Okay, you cannot have a Paydex score, which is the most common business credit score used in the business credit world, if you don't have a DUNS number. So you absolutely have to have that established. If there's no DUNS number, you're never going to have a record established with D&B. So first thing you want to do is you want to make sure that you see if your company's listed already or not. You can go to creditsuite.com/reports. creditsuite.com/reports to do that. Once you get there, there's a free link with Dun & Bradstreet, Experian, and Equifax just to do a search to see if they even know your business exists. If they know your business exists, you want to get your business credit reports. Because like I said, you could be issued a failing score even if you have no credit. So you want to make sure that you're doing that. That becomes very, very, very important. Okay, and you've got to have that DUNS number in order to be able to get that Paydex score. So once you're in D&B search system, you want to go in, do that search with all three reporting agencies to see if something's reported, and if they pull up a record, as I mentioned, you want to get credit monitoring. You want to see what's on there to see if they've issued you a failing report and score, even if you have absolutely no credit reporting. So let's talk about building business credit. Well, the very first thing you're going to want to do is get credit with vendors. Okay, these are vendors that will give you credit with minimal effort, and they report the credit to the reporting agencies. They sell everyday things that you're going to need, like office supplies and shipping supplies. They're also going to give you terms such as net 30. Just so you know, a net 30 account means you need to pay off the balance in its entirety in 30 days. A net 60 account means that you need to pay off the balance in its entirety in 60 days. So what that means is it means if you have a credit card with a limit of $1,000, you put a balance on there of $100, unlike a normal credit card that you could pay $15 a month till you pay that off that $100. With net 30 accounts, you'd have to pay off that full $100 within 30 days. That's what net 30 is, and that's how almost all vendors are going to give you initial credit. So let's think about this. In the consumer world, we start with secure credit cards, right? You get a $500 credit card, you give them $500, they let you use the $500 on credit, build some credit, and you pay interest on your own money. Seems kind of crazy, but that's how the system works. In the commercial world, we don't really see a lot of secure credit cards. Wells Fargo has one, but you need average or better credit to get it. I don't really recommend it because I don't like consumer credit checks to get accounts that build business credit. You don't need them. In this world, you're going to have net 30, net 55, net 60 terms. So you got 30 days, 15 days, 60 days to pay back that balance in its entirety. Way better than secure credit, but not my goal for you. My goal for you is revolving credit like normal credit cards. Now, some of these sources are going to make you place 2 or 3 orders first. It depends on your fundability. Okay, I touched on a handful of fundability factors. There's actually over 125. So you should follow us on YouTube, youtube.com/credit suite. Like our channel, subscribe. You'll know when we go live every week here, Tuesday at 1 o'clock Eastern. And what that's going to help you do is it's going to help get you a lot more elaborate training on things like fundability, diving into the other 120 factors that are out there, right? I covered like 5 today. There's over 125 that are out there. So you've got to make sure that you come in and build that fundability the best you can. That's going to give you the chance of getting away from placing these first few orders. But if you haven't done that or you messed up, then it's possible that some of these vendors will make you place 2 or 3 orders before they'll give you an approval. Some of them are going to request a DUNS number. Some of them are going to want a bank credit score or your Paydex score be established. Some of them are going to ask that you have bank references. And again, some of them won't even give you credit or report it until you buy a certain amount of money, usually over $50. So some of these sources I'm going to talk about make you spend more than $50 before they're actually going to report that credit. So you should know these variables that come in. So again, often you need to apply for credit, go through 1 or 2 denials before approval. That may happen with some of these vendors, especially if you haven't established fundability. They're going to come in and they're going to make you place 1 or 2 orders before they're going to come in and approve you. But don't worry, if that happens, then you probably want to go back and look at some of these fundability factors. The other thing you want to know is that on your 3rd order, they're going to typically approve you for credit. Okay. So that being said, and Freedom asks, how much should you be spending with each vendor? Really, you want to ask them. Every vendor is different. The reality is very few of them have a minimum payment requirement that you must make in order to actually get it reported. Some do. Uline, Quill, for example, have those minimums. So my advice, if you're doing this on your own, is go to the vendor and ask the vendor. Okay, again, the nice thing about working with a company like Credit Suite is that we already know all that. When you go in and look at every source we have, we tell you the exact underwriting requirements, exactly what you need to spend. We do all that to save you tremendous amounts of time. If you're doing this on your own, well, then the only way to do it is to call the vendor and ask them. Ask them how much you must spend for it to get reported. And I always recommend calling and talking to 2 to 3 different people so you get the right answer. If one person tells you one thing and somebody else tells you something different, then call a 3rd time and see if that 3rd person says the same thing as one of the first 2 people said. So again, the only way you know is to ask them, unless again, if you're working with a company like us, then what we're doing is showing you that. But typically, only some of them make you spend $50, and it's only a couple of them that do that. So then you're going to have an established credit profile. Once you come in and get these kind of vendors, then the key to do this is you've got to go get approved for them. So some sources include Uline, Quill, Strategic Network Solutions, for example. These are companies you can go buy their products and services, put them in your cart, check out using the Invoice Me option, okay? And then if they tell you, boom, if they tell you they shipped the item, then you got credit. Then the last thing you want to do is pay that bill as soon as you can, and then that will report to the business credit reporting agencies. Remember, and we'll talk about this a little bit later, your business credit scores are based solely on how you pay your bill, how quickly you pay it. So if you want to have good business credit scores, the minute they let you pay, you need to pay. So vendors like Uline and Quill will let you pay after it's shipped. Let me clarify that. You have to pay after the item ships. If you go in and you order stuff and they tell you, okay, they got your order and you go pay right away, it's going to be considered a cash transaction. So in order for it to be credit that gets reported, they need to ship the item. The minute Uline or Quill ships our items, we pay immediately. But okay, if we're coming in and we're also coming in and instead of that, we're using Home Depot or we're using Office Depot or Staples, well, then they won't even let us pay right away. They make us wait for a statement to be populated to pay. My advice is pay as soon as you possibly can because that's going to determine what your actual credit scores are. And with an established business credit profile and with that score, then you can start moving on to the other revolving credits that we're going to talk about here, okay? But again, you need to start with these kind of vendors. So some ones we love are right here: Granger, Uline, and Quill. Quill sells over 1 million products, including a lot of office supplies. Any business can use them. Uline sells all kinds of shipping supplies. Any business can use them. Granger's more for outdoor and industrial type stuff, but even normal businesses can use first aid kits and batteries and all kinds of things that they sell. So these are three of the easier types of vendors to be able to come in and get approved with. Now, once you have about 5 to 8 of these kind of accounts, then you're able to move on to the next credit tier, which is called the retail credit tier. Now, once you have this, then you're able to start getting more revolving credit accounts. It's still some net accounts, but you're able to get them with almost all major retailers. Okay. Now, again, you got to make sure you pay those bills on time. Okay, that becomes very important to get the best score that you're going to use. And of course, don't use more credit than you can actually manage, et cetera, et cetera. You understand that. But you also need to make sure that these accounts check with the credit issuer on how often they report. Some credit issuers only report quarterly. So that means that if you go get 3 vendor accounts, well, then you got to be careful because one of those 3 may take 90 days to actually report, while the other ones are 30 days. Okay, so you need to make sure that you check with them to see how often they report. One of the best tips I give about building business credit is if you want to build business credit quickly, get more accounts than you need in each tier. So I'm telling you, the minimum you need is 5 accounts to move on to retail credit. Well, then get 8, get 9, get as many vendors as you can. That way you have the best chance of them reporting quickly so you can move on to the next step. Another question I'm often asked, how long does it take to build business credit? Right here is what determines that. It determines based on how long it takes accounts to report. Most of them report every month. Some of them report every 90 days. If you're building your business credit profile with credit issuers that report every quarter instead of every month, well, if you can imagine, it's going to take a lot longer to build business credit because you're waiting 3 months for that credit to report. So make sure you know the reporting cycle. And again, a client of Credit Suite, we have all this information for every single source listed, where they report, how often, what you need, so it just saves you time. You could just go in, immediately apply, get approved, and move on. But these are questions you want to ask credit issuers if you're going through this process yourself. How often do you report to their business credit reporting agencies? What credit reporting agency do you report to? Okay, so again, the nice thing about working with us is that we list this. If we're telling you to go to Quill, here's the exact underwriting process. Here's what they need for approval. Here's how to get approved. Here's the link. Here's who they report to. Here's what you got to spend. You know all that. But if you don't, you've got to ask some of these questions to credit issuers to get the best idea of when these things report, how much you need to spend, what reporting agency they report to, et cetera, et cetera. But most of them will report 30 days. A lot of them will report quarterly. So when you have 5 or more accounts, then you're on to this retail credit tier. But you've got to have those 5 accounts plus first. So I'm giving you a range of 5 to 8 for a reason. You might have 5 accounts, and you may be able to go in and get an Amazon account. But you're going to need 8 or 10 accounts to be able to move on to something else. So some retailers will want you to have 5 accounts to approve you. Some will want 6, some will want 7, some will want 8. The larger majority of them are in that 5 to 8 range. If you have 5 to 8 accounts, you can start to get approved with many of the retailers. There's still some that'll want 10 accounts or 14 accounts reporting. But as you're learning, business credit building is more driven by the number of accounts you have than anything else. And that's another question I get. Does revenue matter? Does time in business matter? Yeah, it all matters. But if you have enough trade lines, you can get past some of those other things if you don't have the time in business, the revenue, those type of things they're looking for. So let's use Lowe's as an example. They report to DB, Equifax, and Experian. They're going to want to see your DUNS number, your PAYDEX score of 78 or higher. Those are the main things they're going to want to see. To get a 78 PAYDEX, you need 3 accounts reporting to them that you're paying as agreed. That's it. So if you already got your DUNS number, which I already told you to do in a prior step, and you already got 3 accounts that are vendor accounts and paid them as agreed, which I already told you to do in a prior step, then you would qualify for that account. So that's exactly gives you kind of an idea of what it is. Now, it doesn't mean this is their basic requirements that you have enough trade lines, but again, if you have the 5-day trade lines I'm talking about, if you have the DUNS number and you pay those accounts as agreed, then you're able to meet those criteria just using Lowe's as an actual example here. Okay, so that being said, you also want to come in, excuse me, I'm working from the home office, so I've got a little bit of background noise here. Hold on one second. Really sorry about everybody. Sorry about that. I'm doing this live stream from my house, and my dogs are going a little bit crazy. But anyways, I'm back. So the next step is the fleet credit tier. So if there's 10 or more account reporting, then you can start to get onto this fleet credit tier. Okay, this is where you can get auto vehicle repairs and maintenance. This is where you can get fuel for vehicles, these kind of things. Okay, so this is where basically, if you're in the transportation industry, it becomes really important to be able to get this kind of actual credit. Okay, so this is where you can actually really fuel a fleet of vehicles. And Shell is an example. They report to all three report, or D&B and Experian. Paydex score of 78 or higher, 411 listing is what they're really looking for in order to be able to get approved. Okay, you could still get approved if you have that kind of credit. So let's talk about the cash credit tier as we wrap up here. So if you come this far successfully, now you can move on to Visa card, MasterCard, which is the cash credit tier. This is where you can use your EIN and not your social. They're probably going to ask for your social for verification purposes. Okay, but you can tell them that you're not giving the authority for a personal guarantee and credit check and still be able to get approved. One example is a Fuelman MasterCard. They report to D&B and Equifax. You need a 78 Paydex score or higher and 10 trades reporting to D&B. You typically need about 14 trade lines reporting to get these Visa cards and MasterCards without the personal guarantee and without the personal credit check. You also need to have a credit card with a $10,000 limit or higher to be able to actually get approved. Now, Latasha says, hi, I'm stuck finding 5 to 8 vendors. I currently have 2. Well, one of the best things to do is if you go to Facebook and type in Get Business Credit. As a group, we've got about 30,000 members in our Get Business Credit group. They're commonly exchanging vendors, and they're success with vendors that can help you. So go there. You can also go to creditsuite.com/EIN, and there's a great guide there for you to be able to build business credit in more vendors that are reporting. And then Vigilant says, does Puffer Web still report? I don't. Last time I checked, the answer was no, but that was probably a month and a half ago. So I'm not sure as of right now if it is. We deal with so many sources, memorizing all that as it changes often. It's tough to do. But I can tell you, and again, not self-promoting here, but this is one of the nice things, guys, about if you are working with us and we make it very affordable. We have a whole data team that updates our system in real time that says that. I just don't memorize all those because they change so much. So last time I checked, they weren't reporting, just so you know. So huge dividends here. Business credit helps you get loans, okay? The lender knows you're paying your bills on time. They know your business is for real. Your EIN connects to the scores, so lenders don't feel that they demand all the personal guarantee. Now, again, just because you're doing this doesn't mean you're going to get away from personal guarantees, but it's essential too. So I can't say that enough, that you cannot build business credit, okay, or you can't get money without a guarantee unless your business credit's built. But just because you build business credit doesn't mean you're going to get loans without a guarantee. It's a necessity to get loans without a guarantee, but there's a lot of business credit building that's necessary to get to that point. So let's recap. You got to create that fundable business foundation. Becomes extremely important. Getting you set up with the EIN, setting up your entity, getting your DUNS number with D&B. Okay, you got to start with that first tier first, vendor credit. There is a way around this. If you go to creditsuite.com/get funding, if you have good personal credit, we can get you credit lines up to $150,000 that report to the reporting agencies. So you can use your good credit to be able to qualify for initial credit instead of vendors. Then you want to move on after the vendor credit tier to the retail credit tier, then to the fleet credit tier, then to that final step of cash credit tier. Remember, retail credit takes about 5 accounts reporting to get there. Fleet credit's about 8 to 10, and it's about 10 to 14 to get almost every kind of Visa or MasterCard with a $10,000 high limit to get there. Okay, with excellent business credit, then you can start to be able to get even higher retail limit cards, $20, $30, $40,000 cards, and you can get cash credit within 4 6 months, up to 9 months, depending again on how many credit sources you're getting and how fast those report. All without the personal guarantee, all without the actual credit check, even as a startup, even if you don't have the cash flow, even if you don't have the actual collateral. So, also keep in mind, if you want looking for loans and credit lines, we can help you with that as well. Okay, we don't ever charge you any fees to get loans and credit lines. We deal with all kinds of funding. We'll help you escalate to an SBA loan, etc. And we've got business credit programs that if you're calling us and contacting us are very affordable as well, even options we don't have on our website. As a matter of fact, we give you such big discounts on 411 listing, getting your DUNS number, getting credit monitoring. You'll typically find it's cheaper to work with us through this process than not. I always like to say that if you're working with us, it takes about 6 months to get through the very end of the process. If you're not, it could take you 2 to 3 years just because you're going to run into a lot of hiccups along the way and not have somebody to help you through that process. So feel free to reach out to us and let us know. We've got all kinds of programs that are very affordable, but cheaper than doing it on your own to help you through this process. 877-600-2487, info at creditsuite.com. And also visit the top right of our page, creditsuite.com. We go live on Facebook and YouTube daily, or excuse me, weekly. We actually have content on Instagram and on Twitter daily. We even have a podcast you can listen on the go, and that's all at creditsuite.com. Thanks everybody for tuning in. And again, if we can help you along the way, there's our contact information, 877-600-2487, info@creditsuite.com to make sure that those questions are answered. Latasha says, what's the least amount of money that I can start your program with this week? Call our team, 877-600-2487. Okay, you can see our pricing on the website, but it depends on what's a better fit. We have different kind of programs that may work for you based on budget. So just give us a call. Tell us what your scenario is, and we will actually give you the best option that works for you. And Wiseman says, when you get to tier 2 and 3, most of the accounts require a certain amount of revenue. What if your business doesn't? They don't require it. On the pages that when you go to check out, they'll tell you that they do. You got to be in business 3 years or have 1 million in revenue. But the answer to your question very simply is that if you have the right amount of actual trade lines that I've told you here, that will oftentimes trump the revenue and the time in business. Meaning we have businesses all the time that are startups, business 6 months, way less than 1 million in revenue. They get these accounts that say you have to have 1 million in revenue in 3 years time in business because they have the right amount of trade lines. So just remember everybody, get the trade lines. If you get the highest volume of trade lines like I'm telling you here, the trade lines will drive you to the approval. Even if it's a manual approval, it will drive you there even when you don't have the revenue and you don't have the actual time in business that many of those applications will state. So I'm going to wrap this up. Feel free to give us a ring. And just because I'm out of this YouTube live does not mean that I'm done with your questions. Feel free to give us a call at 877-600-2487 or send us an email at info@creditsuite.com. Thanks everybody. Have a great day.